everybody. I hope you can see and hear me well. Yeah, I have a short presentation today, like everybody, so I try to squeeze in this 15 minutes of time, as much valuable information I can to you about the importance of Bitcoin in the investment portfolio. And yeah, so I will now share screen so that you can see the short presentation I prepared for this. And my goal again today is really to show you that Bitcoin most definitely has a place in your portfolio, and not only that, it's very important as it can significantly increase the performance of your overall portfolio. So, okay, now let's see the presentation. We are sharing the screen, obviously, and now we will start with this. Okay, let me just okay. So, without further ado, as I said, Bitcoin can significantly increase the performance of your investment portfolio, and my goal today is to demonstrate this how and why. Fidelity Digital Assets is part of Fidelity Investment Group, one of the leading global asset managers with over 8.3 trillion total customer assets. So one of really the top 5, I would say, in the world. And they're very active in the crypto ecosystem from early on. And just this month, actually, they published a second study or analysis in the series of Bitcoin investment thesis, which is Bitcoin's role as an alternative investment. And I'll just extract a few of the more important things here. If you're, of course, welcome to read more about it in their analysis, but they did a simple comparison. So a traditional investment portfolio, really the basic one, would be 60% stocks and 40% bonds. With it, you are actually able to, I would say, significantly reduce the risk of your overall portfolio and still generate nice returns. And by adding only 3% of Bitcoin into your investment portfolio, you would just marginally reduce your allocation to stocks and bonds in this case. And we will see what this can, what is the effect of this small allocation to Bitcoin. Yeah, today I will mostly talk about Bitcoin. There are many other cryptocurrencies and interesting projects, but if you're making the first steps into this ecosystem, I think we all agree Bitcoin is the best to start with. So we'll compare several metrics of the portfolio performance without Bitcoin and 3% Bitcoin allocation. So this originated in the 1st of January 2015 till the end of last month, actually. So as I said, it's a new analysis. And the annual return was 6.8% for the portfolio without Bitcoin allocation and 10.2% for the portfolio with Bitcoin allocation, which actually means that you generated 3.4 percentage points of additional return per year just by having 3% Bitcoin. You had marginally higher volatility, which of course makes sense as Bitcoin is far more volatile than other assets. What's very important, your risk-adjusted performance was 34% higher, measured by the Sharpe ratio, and maximum drawdown was actually lower with Bitcoin in the portfolio compared to the portfolio without it. So this is a lot of financial, let's say, indicators, and if they don't tell you much, I did a simplified version of it. Just to mention here also is a small disclaimer, but very important, that past performance is not an indicator or a guarantee of future performance. This is something worth having in mind when making any decisions about investments. So to simplify the difference, if somebody will make a 100,000 investment in the beginning of 2015 and held it till the end of last month, the portfolio without Bitcoin would generate total, not return, but the total value of the portfolio would be $146,000 US, and with 3% portfolio allocation, it would be $175,000 US. And again, just to tell you, the drawdown of your portfolio would be actually the same, and the volatility just marginally higher. And of course, with 10,000 investments, just the numbers are lower. One thing which is very important here is rebalancing the portfolio. So what is meant by rebalancing? adjusting portfolio structure to restore the target allocation. So you could start with this initial allocation, as we stated out before, so 58.5% stocks, 38.5% bonds, and 3% Bitcoin. And for example, in 2000, let's say 17 or even before, Bitcoin was really appreciating substantially. And let's say now this is, of course, the exaggerated example, but let's say that Bitcoin went up to 10% of your portfolio. This would, of course, increase the return, but also the volatility. Or in the other situation, like 2018, for example, maybe your allocation would decrease. The act of rebalancing means just to bringing the asset, the target allocation back to the original weights, as I stated them before. And this is a very simple rule and easy to implement, and Fidelity with this analysis actually made quarterly rebalances. So at the end of each quarter, they always rebalance back to the original structure. And with this, they were able to achieve the results that we saw before. Rules-based rebalancing is very important. It forces you to buy low and sell high, because it's very important if you invest that you define certain investment rules and that you stick to them. If not, you're bound to go through the emotional roller coaster that everybody is well aware of. Like again, we can see, let's say 2017, unfortunately, the majority of investors entered crypto late 2017, early 2018. Now we went through the whole bear market and this negative emotional cycle. Now starting again with a positive, I would say that we are in early stage of the optimism on a global scale. And of course, I would say now is a good time to start allocating something to Bitcoin and not to wait for the thrill and especially euphoria phase where every media outlet will talk about Bitcoin price and the new highs. And that's why the rules-based rebalancing is really important, again, to buy low, sell high, and not vice versa. Why don't more people invest in Bitcoin? Grayscale did a good study last year, and it showed actually that 75% of the people who are interested in investing in Bitcoin but haven't invested yet say that digital crime is their #1 fear. So there are occasional hacks, one of them just recently, which are part of this ecosystem, unfortunately, but there are now measures taken, and basically all leading exchanges have recovery funds. Some of them even have insurance policies. So I can say easily that with the leading exchanges, your assets are well protected. 65% have concerns about an unregulated market. This is something that's also changing quite substantially recently. And 89% said that better education resources would make them more likely to invest. And of course, my presentation is a small step in this direction. And at Solidum Capital, we take a lot of time and effort to educate investors about Bitcoin and other cryptocurrencies. So how many people are already in crypto currently? Are you late? I would say no, because University of Cambridge is preparing annual study, benchmarking study about the crypto assets. And according to their research, there are currently approximately 100 crypto users globally. What does this mean? Basically, only 1.3 of the world is in crypto, but the number is, as we can see here again, is growing very, very rapidly. Why do people invest? So if they overcome these obstacles, and many of them were overcome by the industry itself, what do people see in Bitcoin really? That it is independent, so there is no central authority that governs its monetary policy or global distribution. Unlike the fiat currencies, where we can see, especially this year during the COVID pandemic, the central banks actually printed virtually trillions of USD, Euro, Japanese yen, and other currencies into the system. They injected them, and of course, this diminishes the value of fiat currencies. Bitcoin has no such thing. So it is not controlled by any government. You can send it and receive it without any interference. It's scarce. There will be only ever 21 million Bitcoin. And as more people start getting interested in Bitcoin, the more its store of value aspect will be prominent. It's verifiable. As you know, blockchain technology is the one that drives this behind. Is this decentralized global network of thousands. I think now it's close to 11,000 computers around the world that maintain records of all transactions. And Bitcoin is also portable, so it's very easy to create a wallet, to buy Bitcoin, to sell Bitcoin. Even it's divisible. You can buy a very small fraction of Bitcoin. As you know, one Bitcoin is currently over it's actually 12,000 USD and more. So you can say it's a bit a lot to buy one Bitcoin, but you can actually buy a Bitcoin just for a few dollars or euros or whatever currency is your native currency in your country. So one thing, you can create the wallet and you can go to the gatekeepers without going through the gatekeepers of financial institutions. So Bitcoin can easily cross borders in an instant. Big investors are entering crypto for the reasons I just stated. Paul Tudor Jones, one of the most prominent hedge fund managers, actually this May invested in Bitcoin personally and with his hedge funds, and he sees it as a hedge against inflation. As I said, central banks are pouring enormous amounts of money into the system, and many people expect inflation to be here in the long run, which will again reduce the value of your assets. And he said the best profit maximizing strategy is to own the fastest horse. If I'm forced to forecast, my bet is it will be Bitcoin. And this was in May, and Bitcoin is substantially higher today than it was in May. And what's really interesting to see currently, this is something that many, let's say, people in crypto are telling about for a long time, that people and companies will start seeing Bitcoin as a treasury reserve asset. So instead of holding everything, all the reserves in cash, which is getting less and less valuable over time, they will start probably allocating to Bitcoin. This really started to happen just recently. The first one was the publicly listed company MicroStrategy that made a 250 million purchase of Bitcoin in August this year. Later on, it increased it to 425 million, and basically almost all of their reserves are in Bitcoin instead of in cash, because they believe that cash is melting ice cubes, so their CEO says. Square, one of the largest public companies in the world with 80 billion market cap, invested 1% of their treasury into Bitcoin as a start. Then this was this month again. Then was a 10 billion asset managers, Stonerich, that also invested substantial amount of money into Bitcoin. And then again, just yesterday it was announced that a UK listed company also is decided to invest 10% of their cash reserves into Bitcoin. So the ball has really started rolling now, not only in the private sector, in the institutional, in the corporate sector. And of course, if you look at the basic market dynamics so of supply and demand, the supply is decreasing. The supply of new Bitcoin is decreasing over time due to its mechanism. And the demand is actually substantially increasing, and everybody can tell you how this will affect the price. Also, year-to-date returns of assets and some other asset classes as a comparison, because some of you might say, well, it's too late to invest now in Bitcoin. I would say it's still very early days. But nevertheless, this year only Bitcoin strongly outperformed every other asset and asset class, as you can see here. I believe it will continue to do so in the coming years. So to end it up, what are the consequences of investing, let's say 3% of your investment portfolio in Bitcoin? The worst case scenario is actually that you lose whole of it, the 3% of your investment capital. This might not happen because of you of Bitcoin to zero, but maybe you did something wrong and lost your keys, which is very important as well. But I will not talk about this today. I think my colleagues later on will talk more about it. The best case scenario is that you can significantly increase your portfolio performance. And this is, I think, what drives more and more people to Bitcoin. Really, in the end, I want to say that it's very important to educate yourself or you will lose money. This is the sad reality of all the asset classes. You need to educate to invest wisely and properly, and crypto has some additional risks. I didn't want to just hype you here, but I really want to stress out the importance of education. And again, this is what we all try to do today with this event and many others that we are presenting on. So that concludes my presentation, and I'll be happy to share any questions you might have in the coming minutes.
Okay, we have one question that we received through email.
Okay.
And this is the question: until recently, Bitcoin follows the trends of the world stock markets. Can this change in the future? Yeah,
it actually just changed in the last few days. So Bitcoin is you know, in the recent months, it was correlated to the stock market. Before that, it was correlated to gold. Sometimes it was correlated inversely to USD, and Bitcoin has higher and lower correlations to different asset classes. It had them in the past, but over the long run, it's actually uncorrelated to other asset classes. It has its own trajectory, and this is what I think is one of the most interesting aspects for institutional investors to allocate to Bitcoin. So yeah, I think it's this correlation is decreasing already with the stock market.
Okay, thank you very much, Gregor.
Thank you, Tanya.
Thank you.